Good day, entrepreneurs. We're going to do costing and pricing for our products and services. And I'm going to show you few mistakes that we generally make as entrepreneurs. But I also want to show and share some of the things that I wish in my learning in business and also in my experience, someone will have told me. That pricing is actually not about cost, it's more about value. So I will share some of those experiences with you. Costing and pricing is one of the reasons why most businesses really struggle to actually make up and do a good markup and profitability. I would like you also to understand, as you enter in the market, in most instances, you can't detect the price. The price is already set by the market based on the demand and supply. But sometimes entrepreneurs do not even know and understand whether are we oversupply or undersupply, and that influences the price. But the other thing that entrepreneurs make mistakes on when they are costing and pricing, they don't know the customer profile. They don't understand the value that that customer places on the product or solution or service that you are offering. Let me make an example. When the insurance man sells you an insurance, he says to you, the value of the car I will cover for you is 300,000 and you will pay 150 per month to cover 300,000 car. Already you're going to ask yourself, should that car break or that car get stolen, I will not have a 300,000 to replace that car. But the insurance man will say, yes, but the money that you are paying as a premium is 150. And then you look at 150 rand and say, hang on, 150 versus 300,000 that I will need to cough up. And then you will say, you know what? I will rather take the insurance. So the insurance man did not sell you the premium, but they sold you what? The value that they will replace. So I hope as we are building up this knowledge on costing and pricing, you can be able to actually do some of those ideas and think about in your environment what values that you need to bring. What problems do you think you can quantify to the customer and cost that problem so that the customer sees the value, not the cost plus price. And I hope you will enjoy the session. Thank you. Okay, entrepreneurs, as I said earlier, we're going to cover costing and pricing. One of the biggest challenges that we generally find on costing and pricing is that entrepreneurs do not understand that pricing has nothing to do with the cost, it's about the value. And as a result, they will think that when they are costing their products, they're going to say cost plus margin equal to the selling price. Today, the purpose of today is for me to show you the process of costing, and I will also share some sheets, costing sheets that you can use that will actually give you a framework of what are the things you need to consider. But also let me say this, costing is very complex. Depends on the industry, it depends on your inputs, it also depends on how you're managing your business. Because at the end of the day, costing must also account operational expenses so that when you're pricing your products and services, you know exactly how much it costs to run that business. So here I'm just going to show you a process and also show you the elements within the costing, and then I will talk about the pricing as a separate idea of the things that you need to work on. I generally say to entrepreneurs, sometimes it doesn't really matter how much it costed to produce what you are producing. What matters, can what you have sold in totality cover your operational expenses? And in most instances, it doesn't. We tend to overinvest or spend too much than what we're getting in. So I'm going to try to show you those few principles. Now, the first step in costing is to understand that you're going to need three things. Number one, you're going to need to know what are my raw materials. And I'm gonna try by all means to use my example as a trainer. The next thing that you're gonna need to work on is to understand what's the labor involved to actually produce that product or service. The last one is gonna be the overhead that is directly linked to what I am actually doing. So when you look at costing, you have to understand that these items is what we call direct expense. Direct expenses. These are related to us producing whatever that you are producing. So as I said, I will use the example of the raw materials in my business. So my raw materials in my business will mainly be related to the things I buy to produce the manuals, the things I buy to actually make sure that the product that I'm offering and the service that I'm offering is delivered. So for a training company, it will be paper when we're printing in-house. It will be pens that we give away to entrepreneurs when they're actually in a training. And the labor will be the time it takes to put that training material together, plus also the time I am delivering the service to the market. And how we calculate the raw materials, we calculate them. So this is what we call your input. So when we calculate the raw material, we calculate them based on the output that we will make. So for example, you buy a box of paper and a cartridge. You will not count each paper as such, but what you will count the full product. The cartridge, the paper, and the time, all that will be in here. So time it takes to put that material together, that is for material. Time to deliver the product, that's a separate, because all of this might be at a different rate based on the skill set that is required to do the activity. So for the raw materials, you will have a box and then you will have a cartridge. You have to know for a cartridge at a specific size, for a specific machine, how many papers it will produce in terms of printing. And then equate that and work out what will be the price per paper. And then you count the number of pages that are sitting in your file. Now you have a client file that is here, but you've counted how many pages. Let's just say maybe a color paper is gonna be what? 5 Rand. But you know in the marketplace, it's actually what? 8 Rand. But you will then work out, maybe in this file manual we have 50 pages. You will then multiply the 5 Rand multiplied by 50, which is gonna be, I think, 250. And that 250 will be the cost only for the material. And then you will look at the material, at the labor one and say, okay, I'm gonna be employing someone to put the files together. What is their salary? If you're paying them a monthly, because salary is usually monthly, or am I paying them weekly, or am I paying based on task? So monthly, weekly, task. If you are paying them on salary, you will divide this by 22 days, because in my business, we work only on weekdays. And then I will get per day how much. So I will take a salary, let's just say maybe I pay that person 15,000 and I divide that by 22 days, I will get the amount. Now I have a rate per day. Based on the number of participants I'm gonna have, I can then say my rate per day is this. I might actually decide to count this pack or this training material at the level up to per participant. So I will then also ask myself to pull together this file. How much time does it take? Maybe it takes 15 minutes, maybe it takes 1 hour, whatever time it is. I will then use this rate per hour to divide that by hours. And if it takes minutes, I will then divide it by 60 minutes. So that I will calculate as my rate per hour or per minute, depending on how long it takes to actually put the material together. Now, that's the cost of putting the material. There is another cost also, which is now service delivered, which is what I'm doing now, running the training. Again, I will apply the same principle of saying that the facilitating fee in my business per day is 17,000. So that 17,000 is per day in facilitation. I will then say, how long will I actually be delivering that product? Maybe I will be delivering it for 30 minutes, maybe for 1 hour, or whatever time, maybe 2 hours, but whatever period it is, I then take this per day divided by 6, which is my productive hours. I do not count the time when I'm taking breaks or cycling, or I only count productive time. This is going to be per hour, and then I work out my rate per hour, and this I can convert it to minutes too. Now I have how much the labor is going to be for delivering of the training. The overheads. Now, the overheads are the things that directly attribute into my direct delivering of this. The overhead in my case will be the travel from where I reside or where I stay to where I need to be. I will need to calculate that based on kilometers, based on the rate that has been agreed with the client. In other instances, you can also use South African Reserve or AA rates, or you can use receiver of revenue rates. And I think I made a mistake. It's not South African Reserve, it's South African Revenue Services that provide the rates per kilometer. You can also use an AA, or you can use Department of Transport, depending on what your client use or what is on your terms and conditions, as we had discussed in the previous sessions. Now, on the travel, you will then put that. The other item that I will add on here will be my space, which is the storage. If the material that I'm actually doing and the content needs, I will actually add the space and the storage for where I will load this information that the clients or the participant need to actually access. I might also add other costs like the learning management system, which will tell me that it's based on a subscription, either annually or it's a lifetime. But I will bring those activities or cost into this, then be able to calculate. I will calculate the space that is required based on the bandwidth that it will take or the size of the content that I actually need to load and keep. I also will take this into account in terms of time. So if I have a client that will say, Precious, keep the content at least for a year, we'll have a different price when the client say, keep the content only just for 6 months. So again, depending on what the client needs, the space and the time actually influence the storage, because this is just a cloud storage that I'm providing to the client. As for LSM, same principle will apply. If the client wants me to have those a lifetime, I will charge accordingly. If they want that information to only be available for a specific time, I will only just keep for that specific time. So those are the overhead costs, but they are still direct expenses. They could also be shared by other projects in my business, but I still need to make sure that I charge so that my gross profit margin remains consistent, and the cost of running the operational expenses is shared across. So this is the framework for costing. Remember, you focus on the output or on the input with an aim to be clear what will be the output. You're counting it based on having the full file being ready for the client in the example that I have made. And I hope you understand, and this will apply whether you are in professional services or whether you are producing shoes. It's the same principle. It's always going to be the raw materials, the labor, the overhead. And that is what, and in other businesses, the overhead could be the machine, the cost of producing something in terms of the machine. So, but in my business, these are my basically direct costs. I am going to try to provide other example for bakery and other businesses so that you can have some different examples, but the principle is exactly the same. No matter which type of business you're in, which industry you are in, you need to understand, what do I bring into the business? What do I buy when I need to produce this? And what labor is required that I need to put in? And at what price? Just be careful. When you are providing, maybe you are saying this, you are working on the salary. When you are working on the salary, remember, work on the cost to company. What's the cost to company salary? That is when you are including a UIF, the contribution that you make as an employer to the employee, and also include corridor expenses, and also include pay slips cost that you pay a service provider to produce pay slip for your employees. Also cost the leave, annual leave, which is about 15 days in terms of basic conditions of employment, cost the 3 days of family responsibility. So this labor cost is not just about how much salary are you paying on your employees, but it's also about considering the cost of employing that person. So that is why this has to always be a cost to company. And one of the things also that I want you to make sure you keep into account, there is in other instances a wastage. You need to monitor where maybe the machine hold the paper and then the whole batch of printing has not come out right. Watch for that, because that's an indication that your processes and systems or the machinery that you are using is not actually running efficiently. And I hope you enjoyed the simple way of doing your costing and how you will actually go about it and how you will actually build it up. I will show you additional examples below. Please just focus on say, what are my raw materials? And when I buy my raw materials, at what packaging are they? What's the output? What do I intend to actually charge out to my client? And how does it look like? In our business, we actually even have files that we buy. We will have things that we're putting in that are already printed that we don't, which are subdividers and stuff. So there's a whole lot of things. Look at your business, look at the processes that are involved, start quantifying exactly how much exactly am I spending when I'm gonna produce this much and how much I'm actually gonna get out. Watch out for that wastage, watch out for your salary to make sure that it's the total cost to company. I hope you have enjoyed the small brief about costing. I will include specific industries, but we will also make sure that when we are running the questions, you send us your industry so that on that Q&A we can actually work out exactly how you will actually use, so that, and also we will give you some of the templates to get you started. In the module that you should have actually gone through and read before you came to this session, you will see we are providing clear practical templates for you to fill for product A, B, and C. What are the raw materials? What's the labor? And how did you calculate that labor? And I hope you enjoyed the costing. I am now going to be covering the pricing. So pricing, I think, is one of the most complex process. It's not as simple as the costing, because in pricing you basically have to price based on the value, not saying cost plus margin. And most entrepreneurs, they think pricing is about cost plus margin. Amazingly, I think it's also because we don't really have a full comprehension and understanding on how really pricing works. I want to tell you a story. 3 years ago, I was working at Alexander. I used to actually run a show there, a business show. One of my clients, who will normally call on Monday morning, called and said, Precious, I've been implementing the ideas of how I'm running my business and I now want to expand. This gentleman was running a business which he was offering in tea in winter, where he has a flask that he had created himself, and he will pour the tea into a cup and sell it for 10 Rand on the street of Alexandra, next to Sandton. And he then said to me, Precious, I want to expand now. I'm doing so well. My tea by 10 o'clock is all done. I actually have made some good money. I now want to expand. I want to open a coffee shop in Sandton. I then said to him, are you sure? And I then said to him, I understand that you need to grow and you feel you actually are doing very well, because he was also saying what he has started doing was refilling it. So after people have bought in the morning, because the demand was mostly in the morning, during the day he still gets more orders, especially in specific areas. I then said to him, you have to understand that even though Sandton is just less than 5 kilometers away from where you are, you cannot actually provide a service.
Can you start where you said, I even said to him that Sandton is 5 to 10 minutes away from where you are.
Okay.
Starting from there because
the noise
yeah.
Okay.
Thanks.
Okay. I then said to him, you know, even though he wants to move 5-10 minutes away from where he is in terms of him providing this tea to people who are on the street versus him now opening a shop, it's a total different market. I then said to him, do you understand that right now, when you are having your coffee that is at the back of your flask, it's already got milk, it's already actually just a Glen tea, or it's just that favor. When you move and now you are approaching a customer that is in Sandton, they will no longer be asking for tea or coffee. They're going to be asking in a coffee, is it Brazilian coffee? Is it Canadian coffee? Is it decaf? Or is it... to an extent that you really need to have a comprehension that the complexities of a different customer profile versus another customer profile. I also said to him, are you prepared to pay a deposit of 3 months? Because for you to secure a space in Sandton, you will need at least a deposit of 3 months for you to have this coffee shop. But in addition to that, you're gonna now, the cup that you are using, which is a plastic cup, in Sandton, they want to use the cup that is called recycled because they're environmentally conscious. They will want to use a spoon that you are stirring. Right now, you are using the same spoon when you are stirring the sugar. You will ask the person how many sugars you pour for them. Now they're going to need a sachet of this sugar for them to actually use. They will also ask brown, or they will say it's white. And in other instances, they might actually say, no, we need a sweetener. So you really need to have a clear understanding who is your customer. Your customer profile is the one that determines your price, is the one that determines how I'm going to serve that client and what's the value. To him, it was about, you know, Precious, the coffee as a Sandton is 30 Rand. My coffee here is 10 Rand. And to him, it was about the price that he will get, the money he will get. If he can sell so much here and he sells those at that price in Sandton, he didn't understand that in scenting is a different need, is a different kind of customer that demands more. That is why the coffee in scenting can even be up to 30 rand or 40 rand, depending where you are buying it. And as I said, it's just not going to be about the coffee. It's going to be, is it Cuban, is it Brazilian? And all those things have a complexity as to his costing, has a complexity into his pricing, and all those costs are going to need to be covered by him. So I really need you to really pay attention before you jump and say, it's time for me to do pricing. I need you to follow the following step. So in pricing, we're going to follow these few steps. So step number one that you're going to select and choose is to understand your customer profile. So some of you don't even know what the customer profile is. A customer profile is when you're analyzing the need of your target customers by the place they stay in, the gender, the level of education they have, the hobbies that they engage in, and the buying spend or buying patterns towards your product and offering. But also preferences. What do they prefer? What do they read? That is how you will build a customer profile. How you determine a customer profile, you base it on the target market. Now, your target market has to be someone who buys from you all the time. So let me explain this. A customer is not just someone who has come and bought something from you. Yes, that's a customer for that specific transaction. But you need to figure out who's the real customer. A real customer is someone that actually buys from you all the time. And if that person or the product that you are offering is a once-off product, you then need to have a strategy on how to upsell your product and services. So let me take a step back. Let's take this coffee business. With him, after we have discussed and I've discouraged him with the idea of going to Sandton and selling a coffee for 30 rand, him thinking he's going to swallow all the profit of 20 rand from the money that he was making, he realized that actually that might not have been a good strategy. He then asked, Precious, if then I want to grow my business, how should I actually be thinking about growing it? So in that discussion, I then said to him, the way he should grow his business is to, one, he has to build up his balance sheet. Right now, his business is based on him waking up every day and going and selling coffee. So he has to build more flasks and sell the flask to other hawkers that are selling food, whom then he can service those flasks and then he will make money from that. But in addition to that, he now needs to see how can he multiply himself. Can he find other people who are looking to make money and he rent the flask to those people for those people to sell in other streets so that he then make money by selling more coffee in different streets and he gets it. Either he choose to rent the machine that he has built the flask or those people work for them. I then highlighted to him, he's going to be very clear if he knows how to manage people, because this might be difficult if he doesn't know how to manage people. I then said maybe as a start, it's better for him to rent out the flask and tell the people the business, but he charged those people for telling them how he ran his business. Now by that, he then started saying, I can actually generate money in different forms. I can generate money by selling the coffee. I can generate the money by actually teaching other people to do what I'm doing. I can also generate money by renting the items or selling the flask to other hawkers that are selling food. I then also said to him, wouldn't it be nice for him, as he's selling coffee, he goes to other hawkers that are selling amagwinya or are selling the cookies or are selling any of the baked stuff, so that when he sells his coffee, he also sell the cookies or sell the baked goods. Even though they are not his, he can buy them at a wholesale price and resell them with the coffee. This is what we call a complementary product, which is, it's the same thing that will happen when you are buying at McDonald's. In McDonald's, they upsell you when they say, do you want that with a big drink? Do you want that with a small drink? They are upselling, do you want that with ice cream? So he's basically going to be saying the same thing to his client. I don't know where he is, but he was very happy. He SMS'd me about 2.5 years ago again, saying that actually I have moved away for that business. That business though gave me a stepping stone to do other things. He had an engineering background, so this flask, he started doing other things within that space. And I hope from this example, you can also learn that you don't need to go to a different market, a different target market. You need to always start to focusing on your niche, rather upsell, like what I was saying to him, rather upsell, but also see how do I duplicate. So be careful when you are going through strategies with Tuli that you go very narrow. Try by all means to go very niche, and then as you go very niche, make sure that you expand, you diversify the income. And let me go back to the target market. What do I mean? The real target market. The real target market, as I explained earlier, is about going to a customer or customers that buy from you all the time. You don't want to have a customer that buys from you once. If the nature of the product that you produce, a customer will come to you once, you then need to have a strategy on how you upsell. Let me make an example. In my business, I teach, I also publish. So when I have a customer that comes to me and say, Precious, I would like to buy a book. They don't need another copy of the book once they have bought one book. But what we do after we have actually sold them the book, we include them in our marketing sales and send them notification when we are running specials, when we're actually selling the training program. Because we know if they love the book, they are more likely also to love what? The training. So we are upselling. We upsell by saying to them, for your program, because it's already subsidized, a 15,000 program will be a 8,500 program with 20 modules. But then if the person says, this point I do not have money, we downsell and say, which areas are you struggling with? We then send them a survey where they will tick the things that are struggling. And from that, we customize the modules that we have and charge according to what they need. And by that, that makes them think also that the price is reduced. But when you really work it out, we make more money when you have reduced the modules versus when you're taking all the modules. Guys, pricing is about understanding when to upsell, when to downsell, and how to build up a straight sales funnel. And I hope you will pay attention when sales and marketing module is actually being covered, because by understanding this principle, you will then be able to know what is my entry product and what's my back product. My back offer product is usually higher than my front end product. So my front end, I don't even make profit from the book because of the volume that we sell in South Africa. The books, they don't get to be sold that much. So I know that the book just gives me and positions me. That's all it is. It's a business card that they will never throw away. Even if they didn't like the book, somebody else might pick it up one day. So you really need to ask yourself, I need to be clear what is my front line and what's my back product, and how do I upsell, downsell, and in other instances, there's also side products. So in our business, the upsell will be the training program. But after the person has attended the training program, we then offer what? The consulting. After the consulting, we offer the coaching. By the time the person is at the bottom of our sales funnel, they can pay as far as 150,000. Because as they get more trust, it's also understanding, what am I offering to a client? What I'm offering is the value, and by that value is embedded on the trust. If the client trusts me, they know I can help them to solve a specific problem. It doesn't matter how much I am charging them, because they know that problem is going to be solved. And that problem is giving them a headache, or that problem is... We also will offer maybe sideline products. So another client came to us for financial statements. And we reviewed the financial statements and we gave them some pointers on the things that they need to work. That is consulting. That client had not come to us for a book, has not come to us for a training. We then said to them, you know what, if you had done a training, you would have known that these things and these things are the risk in your business. Would you like to actually attend some of our training so that next time you can be able to pick and ask the right question to the accountant? And then they attended some of our training. We saw that their business was actually about 5 million. Maybe they needed a closer supervision, but also we monitored. He used to tend to call me all the time, all suddenly. Then I realized I need to set up a session with him and convert him to be what? A coached client. So now he has done a training, he has done a coaching session. So you're gonna need to pay attention to the pattern and the use of the customer, and then from that, build up a product. The point is, entrepreneurs, if Coca-Cola can customize, surely you can also customize your offering. The aim in your business is to have that customer once off and retain them. It's not so much about customer or client acquisition all the time. Most of the time is about you get that customer and retain them. Figure out what else they're gonna need. Even if in other instances you may not make a profit immediately, but figure out how to actually upsell, how to downsell. Work with the client consistently. So in my business, that has worked very well. I have a huge sales funnel. As a result, over the years, I keep on working through it and adding more products and services. That client, I'm intending to actually sell him, after he is halfway through his coaching program, I'm gonna actually sell him another product, which I call it a short cash flow. A short cash flow is when I mainly just help you to always have a cash flow. Because I've noticed that in how he runs and manages his business, he struggles with the cash flow. But I'm not going to offer that part of the coaching. Coaching has got its own topics. I'm not going to add it in because, again, as service providers, especially in professional services, we tend to over-deliver and the client still does not see the value. So I hope you understand about what I mean about target market, and you can use my client example of him thinking about he's going to run a coffee shop in Sandton when his target customers will actually be in Alexander. But I want to also show you that once you have done the customer profile, the step 2 of this process is to make sure that you are clear about the buying pattern. I have mentioned this already. So what do I mean by a buying pattern? A buying pattern is basically understanding how often does the customer buy? And how many units does the customer buy? At what price? Right? Because you want to know if you come to the market and sell something, how much they're already paying for. The last thing though that I want you to keep in mind, when you are doing this analysis, make sure you cover the alternative. What does the customer use in relation to my product? It's almost like you're thinking, if I can't find a Coke, maybe because I like Coke, I might actually drink Pepsi. Or I might actually get water. Or I might actually get a juice. So a juice is an alternative to water, and because it's still, all of it is still drink, it's just about preference. So make sure when you're doing your analysis of the buying pattern, you are clear that when the customer, what's the alternative that they use, so that you know what's the price. I also would like, when you're working with this, you also work out, when the customer buys, what's the main decision that drives their buying. So decision basically is based, do they look at the price, or are they buying versus just a lifestyle, or is the volume what drives them? The buying pattern also is influenced by usage. Remember, I said to you, please focus on the customer that buys from you all the time. So the usage also will tell you. So on the price, this is very important. You see, when you're buying a bag, a Chanel bag, or Dolce & Gabbana bag, they don't look at the price. It's about the value of the product. So by understanding the customer profile, it's going to tell you what exactly are you, the customer, the moment the customer asks you about the price, you should know then that that client or the offering that you make is price sensitive. A product that is price sensitive is like bread in South Africa. When the bread increases, but the salt is not price sensitive. So you're gonna need to really understand, is my product a price sensitive, or is it a lifestyle, or is it influenced by the volume? Within this, these are the things you need to think about when you're working on a customer profile. Step number 2 is to now conduct a competitive analysis. Now, a competitive analysis is competitive analysis. Bear with me with the spelling there. I'm an accountant, so forgive me. The competitive analysis is when you take your offering and you compare it with other people that are offering something either similar or the same product. The purpose of doing a competitive analysis, you don't want to price yourself outside of the market. You also do not want to price yourself too low. This will make sure that, as I said, you don't set the price when you're a small business. Listed companies set the price. Companies that have a bigger market share in the industry will then set the price. For example, you go maybe to a washing industry, washing soap. Unilever will tell you what price they are offering things. You gotta need to make sure you price around their price, even though maybe your costing might be higher than them. Why? Because if you don't, they will eat you alive. They will actually make that price so low that you'll end up not able. So you rather not get to price war. I hope you've heard about things called price wars in the market, where there's fights around the price, and this person increased this one actually. And soap in South Africa is one of the recent biggest price wars. So you really need to make sure you price around the competitors without you being noticed, and make sure that you work on your systems and your processes. The other thing that I need you to work on, which is the last part of this, is the cost of the problem that you are actually solving. So cost of the problem that you are solving. What do I mean when I say the cost of the problem? The cost of the problem is, if this problem does not get resolved or solved, how much will it cost your customer? What will it mean to that customer? And in that space, you should be working out something which I call pain and pleasure. You need to understand what's the pain, what's the pleasure that the customer will get by actually buying from you. And that is very part of your features within your product offering or your service that you are actually offering. So make sure that you are clear of understanding when the customer buys from you, what problem they want and how much that problem costs them. Because when you don't know their pain and pleasure for experiencing your product, you will also not be able to price correctly. Remember, you price based on value, not based on cost plus margin. Because as I said on my example with my Alexander client, his margins were quite high because he didn't have a lot of cost. But should he move to Santin, he will have a huge operational expenses which are not necessarily your direct cost. So his margin and profit will really be small because it will be driven by the volume that he's driving and the number of people that come to him to buy. So as you're building this, you have to keep in mind, the more the customer does not ask you for the price, there's two possibilities. You have really expressed the value. Or two, maybe you are not selling a price-sensitive product, you are selling a lifestyle. I will really also ask you to take time to analyze the needs of the customer in relation to the competitive analysis and also the problem in basing on your pain and pleasure. But as you do that, you are keeping in mind that your aim is to come up with the appropriate price. Some of my coaches have said, you don't tell the client the price, you tell the price at the end. You show them what's the value, and you will say the value of this maybe is what, the rand or dollar is 70,000 rand. But right now, it is what, 50% off, and this is your price. So maybe consider having that in your business, that the value, you have to state the value at all times. And I usually also say to the clients, sometimes when you're doing your pricing, you have given the client a price. If that price was lower, you should show it and say, this is how much discount I gave you. Never underestimate the value and the pricing that you are doing. There are different ways of doing pricing in terms of strategies and plan. I have actually articulated different pricing strategies in the modules, and that I will also deal with in terms of examples when we are running the questions, so that I can customize some of the ideas that I've put on the manual to actually suit your industry. I hope you have enjoyed these principles when it comes to pricing. As I said, it varies, depends on the industry, depends on your operational cost. You need to make sure that as you're building up your pricing, it covers your operational expenses. Because if it doesn't, it means your business is actually going to be running at a loss. And we will also show you the worksheets for some of these activities that we have outlined. And good luck, price well, price for the value, not for the cost. Thank you.